Ladies and gentlemen, welcome to the last panel discussion of this year's FinWeek. But first let me introduce you our speakers today. On my left side is Natalia Ferencikova, Austrian attorney at law at Lansky, Gansger, Goeth and Partner, Rechtsanwälte. And then we have here Mr. Petr Kris from Slovakia, founder of Mangata Finance, crypto company dealing with cross-chain native swaps based on their own solution. Then we have Richard Ščambura, branch director of ORKA Limited, IT development company focusing, among others, on blockchain technology. Then online, we should have three speakers. First is Slavomír Fabišík, digital assets and tokenization expert from FINTECH and INSURTECH Association of Slovakia, FINTECH Valley Europe. Then we have Juraj Forgacs, founder of Fumbi, well-known Slovak platform for investing into cryptocurrencies. And third is Mr. Filip Kollert from Czech Republic, co-founder and CEO at Swipelux, company dealing with payment infrastructure for crypto gaming, crypto exchanges, and crypto wallets and NFT. Then I would like to apologize Mr. Rastislav Vasilishin, who from personal reason could not attend today. So then only 6 speakers will be here. So as I said at the very beginning, our aim for today is to explore this very promising and world-transforming technology. Each of our speakers is expert in the field with specific skills, experience, and expertise. Their practices and businesses might be example for you, how the world of finance is dramatically changing, so you can be inspired to follow the lead. So because the funnel has 6 speakers, and the topic is quite wide, I would like to divide it into 3 main areas suitable for each speakers. First will be tokenization, where mainly we'll be discussing this issue, Ms. Ferencikova with Mr. Fabišík. The second is blockchain technology trends and modern solution, where preferably we will be speaking Mr. Kollert, Ščambura and Kris. And the third one is investing in cryptocurrency situation and possible bull run, where especially Mr. Forgacs and Mr. Kris, Ščambura and Kollert will be also discussing this issue. Anyway, if any participant would like to add something to this discussion, even if this is not his field, feel free to grab the microphone and just share your opinion with us. But first, before we start, I would like to ask each speaker to tell us their own experience, what they actually do, how they practice this solution or technology is transforming current world of finance, law, or investments. So, Natalia, please start with your story, what you do, and what you are doing transforming today world of finance, law.
Is it right? Yes. Good afternoon, ladies and gentlemen, dear guests. I'm really happy to be here today. Thank you again for the invitation. My name is Natalia Ferencikova. I'm attorney at law at Lansky, Gansger, Goeth and Partners Attorneys. We have headquarters in Vienna, but we also have offices in Dubai, Astana, Istanbul, and even in Bratislava. So I'm member of the practice group Corporate and Capital Markets, and since recently I'm also the head of the blockchain and cryptocurrencies special department. So what is our daily business concerning blockchain? We advise our clients on all stages of security token offerings and initial coin offerings, looking deeply into the regulatory obligations and legal obligations that might arise from these offerings. We have prepared prospectus for securities for our clients for a security token offering. We have registered our client as so-called WASP and so on. So this is our focus, mainly in concerning the blockchain topics. And of course, we are very active in capital markets, and concerning the academic side, we are often participating in seminars, blockchain conferences. Last year, I attended in London a very famous conference the token 2049. So we try to stay updated in this very interesting topic and, yes, educate ourselves.
Thank you, Natalia. Mr. Chris, could you also please share your practice, what you do and what you bring to this area of transforming the finance today?
Hello, everyone. I'm Peter Chris. I'm the co-founder and CEO of Mangata Finance. Mangata Finance is a decentralized exchange that enables very easy-to-use exchange in between different blockchains. So imagine you have Ethereum and you have Solana and you want to exchange in between those two blockchains, and we enable that within one simple interface with really nice user experience, and we enable this new type of cross-chain liquidity. Such liquidity do not exist right now in crypto, and we are pushing the infrastructure forward to a new level. So we are one of the puzzles or one of the building blocks of crypto and DeFi. And I believe it is the future. Maybe the last thing that I would mention is that we have investors from Silicon Valley, from New York, so we are funded by the international capital, but most of the people are here in Slovakia.
Very good, very good. So now, Mr. Ščambura, could you please share your vision or what you do and how you participate in transforming the future of finance?
Of course. So, dear ladies and gentlemen, I'm very pleased to be here. And I'm just the co-founder of our company called ORKA Limited. It's originally a Slovak company, divided into two divisions. First division is IT development, and this IT development division is called ORKA Systems. And we are also dealing with blockchain technologies, and we divided it into public and private blockchain databases, and the other one is ORKA OO, which is a classical web design, web development, and creative agency. So we combine all these worlds together. So, for example, if some client would like to have some global project, that we are good at it, I think so. So it's no problem to contact us, and we are able to provide him through the world of digital technologies and advise him the most suitable solution for him. Also, we cooperate with very interesting partners. We have them mentioned in our web pages, and with also very good and very skilled advisory group that is focused especially on crypto and blockchain technology too. So that's it shortly.
Okay, thank you. I'll have more questions on you later. Now we have three speakers who are online. I would like to start with Mr. Slavomír Fabišík. So Mr. Fabišík, could you please share with us what you do and how you participate in the transforming future finance?
Yeah, so I don't know if you can hear me. Yes, you can. Perfect. So hello, everyone. Yeah, so basically my background is in business and tech. So I studied informatics and business, and I switched, I think it was 3-4 years ago to blockchain and crypto, as probably many people did around that time. But regarding your question, what am I doing to transform the fintech right now? That's a very philosophical one. But on the other hand, what in my daily business, I started as a consultant and now started my own company that basically advises other clients on how to tokenize their assets. So tokenizing companies, real estate projects, and because I'm based in Germany, the market is kind of interested in this, and not only for the costs it saves, but also for the transparency and for legal clarity that, at least in Germany, now is becoming better and better. So this is very short summary, but I think we will come to more details very soon.
Yeah, for sure. Thank you, Mr. Fabišík. So next speaker online is Mr. Juraj Forgacs. So Mr. Forgacs, could you please share with us your vision or what you do and how you change the future of finance?
Good afternoon. Good afternoon once again. Okay, so as Peter said, the crypto needs some technology layer that will enable all the companies, all the other actors in the field to cooperate together and to seamlessly send liquidity here and there. But crypto also requires another layer, and that's actually a user experience or product layer facing the general public. So I would say Fumbi as a company that I started in 2018 is really focused on the general public, not the early adopters of crypto, but let's say the early majority that we expect to come in the next 5 years. And with MiCA regulation in place, we think that crypto will play greater and greater role in finance. And what we are here to do is to enable the current to enable the public currently or in the present to invest into crypto, so that when they learn to work with it later, they can still harness some of the growing purchasing power. And these people, the general majority of people, would not be able to invest in crypto now due to obstacles, lack of technical skills, lack of language skills, and so on. Especially maybe lack of investment skills. So what we are here to do is to help all these people with crypto before crypto becomes actually a major force in finance.
Thank you, Mr. Forgacs, for your insight into this area. The last one on the online is Mr. Philip Collert. So, Mr. Collert, could you please share with us your vision and what you do in terms of finance and crypto?
Hi, everybody. My name is Philip. I am one of the co-founders at Swipelex. And what we do at Swipelex is that we are bridging the gap that is between the Web2 audience and the Web3. We've built a numerous amounts of products that are helping Web3 companies to onboard Web2 users. So what we managed to do is build a product that works similarly as Stripe. So we enable users to buy crypto with Visa MasterCard. We've also enabled users to create a wallet with just a Gmail account. And one of the last things that we are currently trying to bring to the market is digital identity passport, because we believe that in the future, any user that is interacting in Web3 will identify only once, will insert there his identity, passport, let's say ID documents, and then we'll have it tokenized in his wallet. And then we'll be just sharing, let's say, a proof of uniqueness to different companies. We've, over the 3 years, helped 60 companies in the market. Most of them are enterprise size. So from the gaming industry, maybe DeFi Kingdoms, one of the largest Web3 games. And we are also backed by VCs based in Silicon Valley. And yeah, I guess that's pretty much it.
Thank you, Mr. Collert. So now I would like to start with one of our first topic, and it's tokenization, which is quite a hot subject today, especially when it comes to tokenization of real-world assets and also security tokens. Tokenization of assets, especially in form of security token, has become recently quite popular method used by companies to raise the capital. As far as I know, Austria is one of the frontrunners in the security token industry. Natalia. What is the approach by the Austrian regulator in respect of tokenization of assets? Could you try to put a position into historical perspective? And so where does Austria stand now as a country in respect of security token offerings?
Thank you. So let's start with the approach of the Austrian regulator towards the tokenization of assets. Very interesting topic. I think it's very also up to date in every other country, including Slovakia. So, but I will share you my experience with the Austrian jurisdiction. So, like in every other jurisdiction, the tokenization of assets, the instrument tokenization of assets caused quite a headache for the Austrian regulator. So in Austria, we have three different types of tokens. However, they are still not legally recognized under Austrian law, and that's security tokens, utility tokens, and payment tokens. And of course, there are hybrid tokens, which contain two or more features of two or more token types. And the most regulated token type in Austria is the security token, because this security token usually qualifies as transferable security under the definition of the existing EU securities regulations like MiFID or EU prospectus regulations, where we can find this definition of transferable security. So this is the most regulated one, and well, if issuer issues publicly security tokens, there are several or numerous regulatory obligations that might arise, and it's very important, and we always tell our clients to consult before carrying out security token offering with the legal advisor on which regulatory obligations can arise here in this particular case in connection with the exact business model of the issuer. So it's very important not to overlook any legal or regulatory obligations. I said like security token qualifies as transferable security under the EU regulations. But which features have to be contained in such security tokens? So the main feature is that the security token has to embody a payment claim against the issuer that might be a claim for payment of profits, payment of dividends, payment of interest. So this is the main criterion, I would say. Another important criterion is that the security token is unrestrictedly transferable. Another feature, also very important, is that it's standardized. That means this criterion is already fulfilled if the issuer has issued a number of same security tokens. And lastly, also a very important feature is that the security token has to be tradable in the capital markets. However, the inclusion into specific platform or on the exchange is not necessary. So if all these criteria are met, then a security token would qualify as transferable security under the existing EU securities regulations.
Okay. Thank you, Ms. Ferencikova. I have a question on Mr. Fabišík. We heard about the rules which are applicable today in Austria regarding tokenization, but why the tokenization as such is needed, or why it actually happened? What is the advantages of it? Why just not transfer the real world assets in basic way as it was in today? Why the tokenization? So could you please tell us why it is the biggest game changer in the token industry today? Tokenization of RWA or RWA.
Gladly, and also thank you for the amazing summary. I couldn't have summarized it better. So basically, the biggest game changer, or at least what I see as a biggest game changer, is the increased liquidity this provides hopefully in a very near future, once there are the secondary markets for those tokenized assets. So this would revolutionize, in my opinion, a lot. So I'm not talking only about tokenizing company ownership or like companies, or like doing tokenized real estate projects where like buyer could buy a fraction of very large property. This is possible already today, and we can go through the process also later if there is interest. But with secondary markets, there would be let's call it a decentralized stock exchange that would be, of course, and now we come back to regulation, wouldn't be that decentralized because you still have the classic AML, so money laundering policies and know your customer procedures that make this space or this future space very much secure and comparable to the existing, even more secure than existing stock markets that are. So answering this very shortly, secondary market, and why is it also why not going just for the classic established processes we have right now? This was briefly also mentioned before, so that's the transparency and standardization. So of course, you can still issue a physical bond certificate, but with tokenization of, let's say, bonds, you will be very quickly able to verify its validity and also, do it in seconds and not in minutes, and you don't need anyone to approve it for you. So hope this answers your question. And I would really like to add one thing regarding the, let's say, the future outlooks. Tokenizing real world assets, as you mentioned before, the sky is the limit. So basically anything you can imagine to fractionalize can be also, of course, sold. Like this can be done also without the blockchain. So I don't like to talk about this topic with a focus on technology, because issuing, minting tokens and so on, it has become a very simple process with the time, and this can be done in minutes. The question, or like the bigger topic right now, as I see it, at least in EU, is the legal framework for this. And sadly, you still have countries as Austria or Germany, where I'm currently based, or like Slovakia, where you have differences. And EU is working on the, let's say, erasing those, but it's going very reactively. So that means also very slowly, in my opinion.
Yeah, that's true, actually. The point is that, as far as I know, it was quite hard for crypto exchanges or any exchanges to sell security tokens or any kind of tokens which at least there is a smell of security. And it is still quite a problem, but there are, as far as I know, there are certain changes which happened last year. So Natalia and Slavomír, could you please just tell us if there are any latest changes in this token industry, what has changed in the EU?
Yes.
You can start.
Yeah. But I would like to come back to the question earlier and present maybe Austria like a front runner in the security token industry.
Go ahead.
Because I think the audience does know that the first security token offering took place in Austria already in 2018. So I think that's something we haven't seen in Slovakia until now. I don't know about the other jurisdictions, but 2018, the Austrian regulator has approved the first securities prospectus in the whole European Union. So therefore, Austria might be called a front runner in the security token industry. And until now, we have evidence-free security token offerings. As I said, the first one, 2018, by an Austrian startup company. That was a public offering. Then another one, 2019, that was a private sale, so there was no securities prospectus. And the latest one that I'm aware of was last year, 2022, by an Austrian real estate company. So the switch from ICOs to STOs in 2018, in my opinion, was because like ICOs were often structured very poorly, so they triggered some legal and regulatory obligations which the issuers haven't been aware of. So they disregarded these obligations, and this drew immediately the attention of the Austrian regulator. And as a consequence, it caused bad reputations to the issuers of coins, and somehow ICOs lost attractiveness for the market participants. So the new era of STOs, of security token offerings, was a response of the market to the mostly failed ICOs, unfortunately. And that's because, like I said, security tokens are strictly regulated in Austria. So also from the consumer protection perspective, this was definitely the better solution.
Okay, thank you. I would like to maybe change now the topic and go to the second one, which is blockchain technology, trends and modern solutions, which I would like to discuss with Mr. Chris Ščambura and Collard. So you are working in crypto industry technologies which are changing the world today. The question is, do you think that this whole Web3 area, blockchain, crypto as such, might really transform the world of finance today or replace it? Is it, or they can live together? So what is the advantage of this industry compared to the old world of finance or old solutions? Why it is such a hype? Why it's so hot topic today?
I would connect this with even the tokenization case, which is, I believe we have the big elephant in the room. And the most successful tokenization case is actually tokenized dollar, and that is USDT and USDC, right?
Sure.
And you could even say that it's a tokenized euro dollar. So it's not like the native American dollar, but everything what is overseas is tokenized on blockchain already. And one of the biggest use cases that I personally like is a remittance. So for instance, Filipinos, when they work in the US, they are sending the money through Ethereum back to Philippines. So blockchain lowers the friction of the international value transfer, because if they would try to do it in a standardized financial system, it would take days or maybe even weeks, and they would pay a lot of fees. So compared to what the fees are paid on the blockchain, it's much lower. And this is a really nice case how this technology can even coexist with existing financial systems. So you have a tokenized dollar, but it's running on the blockchain technology, which is pushing the whole world of finance onto a next level. But this is really just one angle which actually combines these two worlds and is showing a case how they can coexist together. But there are other verticals that are revolutionary as well.
Sure. Yeah, so Mr. Ščambura, what is your opinion on that?
Our company, as I mentioned, is dealing also with another kind of blockchain technologies. And one of it is, for example, enterprise blockchain. Yeah? Mm-hmm. For example, Hyperledger Fabric, Quorum, 3R Corda, and so on. Yeah? These kind of blockchains are much more professional, and they provide very specific solutions as additional value to the financial system. And every kind of this blockchain, for example, private, just like I mentioned, or this big public blockchain like Bitcoin and Ethereum, has its very important part in the financial system, because it's a future of solution you are able to provide to your clients. That's very important, yeah. For example, if we're dealing with our clients, a lot of clients, they have some expectations about that the blockchain is only the part of the whole system we are providing to your client, yeah. So we cannot expect that it will solve every problem, but it's a very additional product to the financial system. For example, when I started my career, I worked as a risker in bank, And after that, I was corporate banker to the large companies. And for me, for example, blockchain, it could be a really nice notarization product, for example. Yeah? Some documentation could be notarized in blockchain and so on and so on. Loan approvals could be, for example, done through the blockchain technology, and there is a variety of useful cases that I could mention. That's it. But I think it's a good additional product. It's a new era. It's a new era, and why not to use it? You know, that's it.
Okay, so as you said, you're working on and you are developing enterprise blockchain, as I understand correctly.
We're not developing the enterprise blockchains are already developed here, and these are private blockchain databases. For example, Hyperledger Fabric. It's hosted by Linux Foundation. Yeah, it's one of the biggest open source blockchain ever. You know, for example, JP Morgan, they developed its own soft fork of Ethereum called Quorum. Yeah, it's their own blockchain. For example, you have 3R Corda. Is developed by originally 9 banks. Now they have a big portfolio of clients, especially from industry, just like banking, financing, and so on. Yeah? And these enterprise blockchain databases are not the big blockchain databases like you are used to, for example, like Ethereum or Bitcoin.
Okay, so they're using this for their own
They're
purposes?
permissioned. They're permission blockchain, yeah?
Okay.
That's the most important difference between these two kinds.
Why they're doing that? Why they're not using some kind of public blockchain?
You know, transparency is really fine, but for example, a couple of years ago, we have one really interesting case study. We digitalized wealth management trust. In local conditions called zverenecké fondy, svěřenecké fondy. In Czech Republic, they are now regulated, and we hope so they will be regulated also in Slovakia.
Hopefully, yeah.
Hopefully. For example, our former citizen, Mr. Babiš, propagated not so in good way the trust, but never mind. We have one case study, and we digitalize trust. And for example, you don't need that everybody will see all transaction in your trust, you know. So it's really private, and much more better to have it private, you know. And the companies that are dealing with private wealth or wealth management, they really exactly know what I'm speaking about. Yeah. Okay. For example, it's a question for attorneys, yeah, and that's it. So in that way, it's better to use private permission blockchain.
Okay, great. So thank you for your input. Mr. Chris, you are dealing with cross-chain swaps. I have a question. Each year, there are several new blockchains, then want to break through and to be the best. Do you think they can still bring something new? Do you think that the current trend is something else? For example, build project with more fundament or solving some interoperability issues? Or what is the trends today in terms of blockchain? Is it still like good, or does it have any meaning to develop new blockchains?
I would say there are no strong trends right now because we are in a bear market, so the whole industry is in a bit of a restructuring phase. And when there is a restructuring phase, there is no clear direction on what the industry wants to do. Of course, you have this smaller trends within the bigger, but there is nothing stronger one. So what I see right now is happening. All the existing blockchains like Bitcoin and Ethereum, they want to scale because they have the limited throughput. So now layer 2s are a topic. So you have these new type of side chains or blockchains, but they are connected to Ethereum. You have Coinbase has just launched this new base blockchain, or it's called Rollup. So it's developed on top of Ethereum. So Ethereum really wants to scale to millions of transactions. This is one trend. Second one is there is always a new design space for new blockchains, how they can develop themselves. So being better, faster. There are propositions we've already talked about the privacy. So a lot of enterprise players, they need to have higher privacy on the blockchain. So I see several solutions that are enabling privacy on the public blockchains like Ethereum. So for instance, your address is shielded, so no one knows how much you own, but everyone can still see the transactions and audit them, right? So there are some solutions for partial privacy on public blockchains. Another topic, which is stronger topic of ours, and that is a problem of MEV, which is the problem of front running and reordering of transactions and manipulation attacks on transactions within DeFi. So there is another vertical of solutions that are trying to make a fair ordering on the blockchain, so it works with the same assumptions as traditional finance or traditional exchanges.
Thank you very much for this input. I think it was very useful because for example, from my perspective, last year I was really when I was dealing with certain kind of project, I always seen just developing new layer 1 blockchains, and I haven't seen any new like reason why to do it. When I see how many people are using Ethereum as such, and still Ethereum prevails in terms of smart contracts and as blockchain as such. Oh, not talking about Bitcoin. So thank you for this input. And I would like to ask Mr. Collard. Mr. Collard, you are trying to somehow connect the Web 2 world with Web 3 world, the classical finance with the Web 3. Could you please explain us why it is so important and how does it work and why it is needed actually?
Yeah, sure. So when you look at the devs that are in the market right now, they have pretty cool product, but it's really, really hard to get in. It's like, imagine creating an account with Facebook, but you have to deal with creating a MetaMask, then going to, let's say, Binance, create an account there, then go to SushiSwap, swap some assets to the local token, and then jump in. So the user experience is horrible, and we are dealing every day with the customers in the space which are struggling with how we can get these people who don't know much about crypto but just want to use the thing that we've built without even knowing it's Web3, and they don't have many options. So I think that in order to scale the whole industry, it's extremely important to think about the people who literally don't know what is even a MetaMask or a decentralized exchange, and they don't even want to learn. So we rather take them by hand, put them into the industry, and they don't even know that this is happening. For example, in the gaming space, it's really, really interesting. It has been an extremely huge hype. Like 2 years ago, there have been new games popping up, but not much of them have succeeded because it was so hard to use and to play the game. I usually, whenever we have a new client and we're thinking about working with them, I usually give the game to my brother, who is like the tester. If this is like easy enough to play the game, and if it's not, then it's a great client for us. And if it's easy to play, they've done a great job. So I think that in order to scale, it needs to be accessible by anyone in few clicks, and that's what we are doing. And I think that without this component, we just simply cannot scale as the industry because it's so hard to get in.
Okay, thanks. You mentioned a good point, which is that it has to be simple. So Mr. Chris, Ščambura, and Collard, do you think that using today technologies of blockchain and crypto is easy for the basic population? Do you think that for adoptions, we are currently in the stage that the adoptions could go so fast that they will understand it, they will be able to use it, or what can be done to that? In terms of technology, for example.
First, we have to define what is basic user, yeah? What skills.
Let's say most of the people do not use still internet banking. You would like to transform the society to use the crypto, so...
I think that for the basic user, it's still the mass. And a lot of companies, industry, crypto industry or blockchain industry, try to make it much more easier in order to understand it and use it. That's it. And also, that's the aim of current situation and regulation. And we will see, you know, because now it's big mess. And it's not so easy for standard user to be skilled user.
You're working, for example, with corporation, and do you think that the corporation as such understand the blockchain as such, or the advantages? Well, how much do you have to explain them the solution you have, or to actually persuade them that, okay, this is good for you? Do they have at least basic knowledge of that? What blockchain is for, or how?
For example, we have such case studies. For example, one nice example is, for example, you have a university degree diploma. Yeah? And for example, in Czech Republic, there is a project. You are able to digitalize your diploma and deploy it, for example, on Hyperledger Fabric, and in other side is easy to find out if your diploma is fine or not. That's it. There are really simple solutions how to use blockchain technologies. And in that way, the basic user maybe don't even know if there is blockchain or not. And finally, the technology is using blockchain, you know.
Yeah, that's the point. That would be the most, the best way how to do it.
Trying to do our application in that way that the blockchain is a part of the whole application, and the final user don't even know that it's all about, or maybe the part is the blockchain. That's it. So do it as simple as it could be, and don't even talk to the final user that it's blockchain, it's blockchain, it's blockchain, it's blockchain, it's blockchain.
Sure.
So do easy application, and one layer of this application is, for example, blockchain functionality.
Okay, thanks. Mr. Chris, do you have any?
I would say we don't even need to expect that everyone would be using blockchain directly.
Sure.
So right now it requires some extent of technical knowledge, but it's much better than it was like 5 years ago. We're still having a long way to go. But right now, a big topic in the US is ETFs. So if they will be approved, it's exactly the thing that will expose Bitcoin to the masses through an instrument which takes away all the concerns around custody, handling the security and storage of the assets, and people would just buy the ETF and then they would get the exposure to Bitcoin. But the nice thing about crypto is that it has this optionality. So if someone do not want to interact with it, you can just go to a centralized exchange or buy an ETF or something like that. And if someone really wants to have the full 100% control over their assets, they can. They just need to learn a bit more technical stuff about it, but the option to do it is there to hold the autonomous money, for instance.
That's true. That's very nice about the crypto that let's say 5 years ago, if you didn't have some technical knowledge, mostly you wouldn't use it. Today there are solutions how you can invest to work with the crypto. Actually, and one of them I would like to switch to the last topic is investing in crypto and talking about maybe the current situation, the future situation when it comes to Bulgan. So, Mr. Forgacs, you are the founder of Fumbi. So, how is your platform, making it easier to invest into crypto for how it works actually and why it is on the market as such. Do we have Mr. Forgacs still online?
Yes, I'm right here. Thank you for the question. As Peter said, you can either buy ETF, or you can have Bitcoin and have full control over it. But in my opinion, neither of these options at this moment is quite reachable to general public, let's say, to the general or average consumer, simply because Bitcoin ETFs are still not available. There are some ETPs, exchange traded products, in Europe, but they are pretty out of reach. And when it comes to Bitcoin as such, you really need to educate yourself. You really need to spend a lot of time in order to secure your assets and not to lose them now or in future. So, and even if you do all these things, you can still lose them because of some virus in clipboard or whatever that would simply copy a different blockchain address to your payment than you originally intended to. For example, there are many other examples how you can actually get burned. So what we are trying to build is a solution that will help you get into crypto market, not only to Bitcoin, because crypto is much bigger, and probably as the time will pass, the whole industry will manifest great richness of different opportunities and different crypto assets. So that's why we are focusing on managed portfolios of crypto assets rather than just Bitcoin. So your question was directly related to my company, so that's why I take the liberty to elaborate a bit. You can buy a portfolio of crypto assets which has its own investment thesis in a few clicks, and you can buy it from a reputable and trustable partner that you can regularly see on conferences, that you can talk to anytime you want, rather than going to an international company which you don't even know how it is managed. It can be still managed like FTX, or it can be governed from some offshore paradise, and sometime you can experience a rug pull or any other pyramid scheme collapse or anything else. So it's still better to use maybe a local partner if you are not sure what to do with crypto, and to use a partner that will enable or explain to you everything that you need to know, and enable you to step in very easily. And that's what we do. So we focus on these managed portfolios as, for example, Crypto Index. Fumbi Index is a product that is an analog to S&P 500 in American stocks. And or we have a small portfolio called Bitcoin and Gold, which is sort of index of hard currencies in our mind. So this is something that helps you get into crypto before you think about using Bitcoin and crypto on your own, because most of the people will probably only learn to work with crypto over time. And by over time, I mean 5 years, 10 years, 15 years. But before they do it, crypto will already grow to much bigger market capitalization, and they will lose the opportunity to harness this growth in the purchasing power. So Fumbi is here to enable them invest first and learn later.
Okay, thank you, Mr. Forgacs. Now I would like to talk about maybe more about crypto as investments and the future bull run. It's quite pity we don't have here Mr. Vasilishin, who is a Bitcoin maximalist. but still, Bitcoin is the main leader. Everybody knows it. Everybody would like to have it. Or at least everybody who knows something about crypto. And other things, all the actions revolves about crypto, yeah, and about Bitcoin, sorry. The question is why? Why is the Bitcoin the main leader? It is better than Ethereum. It is better than other blockchain. Why it is so that everything's turning around Bitcoin? So could you please share with us your opinion why it is so, or can be changed in the future?
Potentially, even though it's very hard, there's a thing called network effects. And once a certain player in these types of markets wins the first competition, then it has a lot of gravity for a lot of years ahead. It's something like social networks. So Facebook started and it went exponentially, and it's really hard to like put the Facebook down. It's already there, and it will stay there probably for a lot of years ahead. But again, I do not want to be very black and white. We have seen a lot of cases in the past where even the first players were overcompeted by others. So it depends, and it depends even on the use case, because Bitcoin is always this store of value. This is the main idea or main narrative behind Bitcoin. So it's something different from Ethereum, and I believe now the market and people are realizing that those two assets should not even be compared to each other that much. They are two separate asset classes with its own performance and with its own technology stack. Even though the markets are not recognizing that because the price is pretty much correlating, right? So if Bitcoin is growing in price, all the other cryptos are rising in price as well, within some delay, but you can just expect it. But I believe in some future we will have a decorrelation of assets. So there could very possibly be that Ethereum will grow like crazy and Bitcoin will not, or vice versa.
Yeah, Mr. Ščambura, what's your opinion on that? Do you think the Bitcoin is the main leader and still will be, or what are the potential better projects?
From our point of view, we are mostly dealing with these utility blockchain functions.
Yeah.
And for example, Bitcoin is not so scalable, for example, and the utility and the usage, for example, of Bitcoin in common life is it's pretty hard, you know. As a storage of value, just like Colin said, it's really nice, but I can't even imagine that it would be so popular and widely spread for daily use. That's it.
You mean Bitcoin, yeah?
Yeah, of course, Bitcoin. For example, Ethereum made a change, for example, and proof of stake, for example, made it a bit scalable with better performance and so on and so on. But these are topics hard to deal with it, you know. Just like to have the value in it expressed is really nice, but for common use.
Okay, so you are quite skeptical about it. We will see. There's Lightning Network, which is quite dealing with this, but we will see in the future. Mr. Forgacs, you are dealing mostly with retail, people who have not so much technical knowledge. When they come to you, do they mostly asking about Bitcoin or would like to diversify? What do you think is the approach of the regular people who are not professional investor would like to deal with crypto? It's only Bitcoin, or it is more like diversifying?
Let me go back first to the previous question that was discussed very, very briefly, and then I'll answer this one. Apart from the network effect, which was mentioned on the demand side for Bitcoin, there is one crucial thing that differentiates all crypto assets from one another as investment asset, and that's level of risk related. And there is a portfolio risk of risk related to each crypto asset, whether risk of the blockchain failure, risk of losing the crypto assets due to user failure, legal risks, risk of criminal activity related to that particular blockchain, complexity risks. So Bitcoin is the safest crypto asset among all of them, and its risk profile means that much more capital can flow into it. So if you are one order of magnitude safer than Ethereum for many reasons, then of course you can get capital, you can get money from more conservative capital sources. And that's what we are seeing in the US actually. So Bitcoin is safer than Ethereum as an investment asset because it's simple. It has no particular technical complexity. Nobody believes that Bitcoin would fail as a technology at this moment. There is nothing, no cutting edge technology research that is happening in Ethereum happens in Bitcoin. So it's basically a target for a more conservative capital, which is much, much bigger than the risk capital flowing into Ethereum. And the other crypto assets are even much riskier than Ethereum itself. So for each crypto asset, you can create certain risk profile. Maybe you can grade it, or you can make a semaphore or something like that with a green light and yellow light and red light. Or you can create a portfolio where these risks are somehow balanced. So coming back to your original question towards me, the general public is really more after the diversified portfolio, where you can have the Bitcoin as anchor of the value, even 50-60%, which reflects its dominance in the market. But the rest of the assets are usually the small cap crypto or riskier crypto. And there are two reasons to it. First is that it still can happen that Bitcoin gets in some trouble. Second, the small cap crypto grows faster than Bitcoin when there is a bull market. So because the capitalization is much smaller, comparable amount of money will make it skyrocket in price, whereas Bitcoin may gain 5-10%. So in the bull markets, the rest of the crypto tends to grow faster than Bitcoin. In bear markets, the rest of the crypto falls faster than Bitcoin. So when it comes to general public, I think our customers prefer a balanced risk portfolio solutions. Then you have customers who want to buy only Bitcoin and Ether, for example. And then you have customers who want to play with the risk assets and emerging cryptocurrencies.
Great, thank you. Thank you for your opinion on that. Now we have quite time already behind us, so I would like to switch to Q&A. We got 4 interesting questions on our speakers, and I would like to start with the first one. Every one of you would like to or can join and share their opinion with us. So it's a general question, all of you. So what do you see as the main blocker from traditional banks to start own initiatives related to blockchain or cryptocurrencies?
The answer is very clearly lack of regulation. Unclear regulation. Banks are very conservative because they are big players. And in order for them to do something, they need to have very clear rules, what is allowed and what is not. And unless there is a regulatory vacuum, the banks and big institutions won't touch crypto.
Okay. Natalia, I know that you are not very, let's say, deep into the crypto as such, but you are a lawyer still. But do you think that the regulation, which is amended or adopted a few months ago, is providing to banks this regulation framework, which could change that banks will dramatically drop or come to the crypto and start their own exchanges? example?
Yes, very good question. I wouldn't talk about crypto, but tokenized securities, because I think that's more interesting for credit institutions or investment firms. So I think you mentioned the so-called DLT pilot regime, which is a regulation of the European Union on market infrastructures, which are based on distributed ledger technology. So this regulation was adopted and came into force in March of this year. And in my opinion, it's a game changer for the secondary market for security tokens, which are tokenized securities, basically, because at the moment in the whole European Union, we don't have any automated, centralized and regulated exchange that would enable the trading of security tokens, because the EU legislation, especially MiFID II and the regulation on central securities depositories, has been adopted long time ago, before the development of DLT. So this European Union legislation contains provisions which preclude or restrict to a great extent the use of DLT in the trading and settlement of financial instruments which are based on DLT. And concerning the specific obstacles, just to explain shortly, for example, on a classic trading venue, on a classic exchange, you as a retail investor, you are not granted direct access. So if you want to trade securities, you need a financial intermediary, like a bank or investment firm, a broker who will do that for you. So this will change under the DLT pilot regime, because you can apply for timely restricted exemption. So also retail investors will be granted access to exchange for security tokens, and there are other exceptions which you can apply for under these DLT pilot regimes, and these are exceptions from MiFID II and the regulation on central securities depositories.
Okay, thanks. I would like to amend these questions maybe to all of our speakers and ask them that, do you think that it is good that bank will come deep into the crypto? That they will start maybe their own exchanges? Do you think it is even possible? And it is a good way to do it? Anyone, if it's just opinion.
More competition, the better for people.
True. True. It's actually, I think the same. So, but are there any other opinions, like Mr. Forgacs or Slavomír Fabišík? Do you think that banks should come to crypto?
Just let me step in. I think it's a wonderful thing. It's something that I've been expecting for some time, and with the MiCA regulation in place in Europe, it's something that is inevitable. And it's only good that banks will be able to diversify their business models, not to be only resellers of the state-sponsored currency, but step into this new world that may be a solid base for civilization in the centuries to come, actually, and because that's what crypto is in my mind. And banks getting in to attract the new users from the younger generation will be the banks that will be slowly changing into something completely different. And maybe in 10, 15, 20 years, their product portfolio will be completely renewed and completely different to what it is now. But for the customers, it's also very good because, as I said, early and the late majority of the adopters of technology require that the product doesn't have any risk, and that is actually provided solving all the issues that early technologies usually have. So for the most of the public, getting into crypto through banks is a safer way to enter, and banks will probably provide products that would combine crypto and traditional banking products, which will make crypto more usable and useful. So this is one thing. Second thing, why it is good on a civilization scale is that it will enable crypto to grow to a much higher market cap, which in turn will pose much or limits on how the government currencies would be debased in future. So if you have Bitcoin at $500,000, for example, with high market cap and being able to spend it anywhere because all shops would already accept it, you have simply an opt-out from the currency system that is debased on a monthly basis, which means that these currencies like euro and dollar would have to adopt much stricter monetary policies and adapt to the new situation. So banks stepping in and the merger of the crypto world and the financial world will lead to a future with lower deficits and more responsible debt, especially for the government. So that's why it's good.
And there is a reverse trend, and that is not banks going into crypto, but crypto exchanges opening up banks. So, for instance, Kraken Exchange has applied for a bank license, so they would be creating this neo bank. So I can see pretty much in the future these hybrid banks, which are something in between traditional bank and a crypto exchange.
There was my second question. I would like to ask that. There might be a conflict of interest that banks enter into crypto because most of the banks today are blocking crypto exchanges and crypto provider from access to the banks because they do not understand actually the market of crypto. I do not have actually maybe the options to mitigate the risk and so on. So there might be a conflict of interest that they will be the one who will be blocking access to the crypto exchanges and the crypto providers, and still they will provide this kind of services. So that was maybe my first question, that if it is good that the bank will come to the crypto, but yeah, you said that there is a solution for it, that crypto exchanges will start their own banks.
Exactly, and I can see the glimpses of this for a few years already, so it's not the first attempt to open up this bank by crypto native businesses.
Good. So thank you for your opinions on that. Now I would like to ask once again, Natalia, there is a question here from the public. Is there still appetite for ICO issuance in Austria, also taking into account strengthening the regulatory framework? So despite there is a regulatory framework, so isn't it that people or the companies are actually do not want to go to the ICO?
Yeah, now there is a regulatory framework, that's MiCAR. Last time I've seen an ICO like in my legal practice was like a few years ago, and our recent clients were interested only for STOs. I've never questioned it, but I see somehow the reason. When we started the STOs, MiCAR hasn't been adopted yet, so maybe that's the reason. It will change in the future. We had some requests, and clients were asking us about the implications of MiCAR, for example, regarding white paper and so on, and we also hold speeches on MiCAR, but that's still like not very. We don't have any practical experience yet. Nobody in the European Union. But I'm really curious if it will switch back to more ICOs in the future once MiCAR is applicable from next year, or especially in Austria, if the issuers will still go for security token offerings. But maybe we can discuss this then next year, and we can compare.
Okay, so thank you. Another question we have is that regarding the banks, so we'll come back to the banks topic. Regarding banks and their adoption of DLT technologies, do you think CBDCs will be run on existing blockchains like Ethereum or on new ones, maybe on national ones? Do you have any opinion on that?
As far as I know, they will not run on public blockchains, and they might not even run on the blockchain technology itself. So it actually went to sideways, and it will be probably some reconciliation or settlement system that is working in behind banks. So like we people, we won't even know that there is some CBDC actually.
Okay. So you think that no blockchain will be involved at all, and there will be some kind of digital money on different kind of technology?
It seems like it's not going in that direction. So as far as I know, and from what I've heard from the banks, because when you think about it, what European Central Bank wanted to do is something like provide people with the direct access to these CBDC. So it's something like you would open up a bank account in the CBDC. So you would make a deposit to an ECB and not to your retail bank that is in your country. But that's a big problem, because in that case, the central bank would take away the business case for the private banking sector, and that's a really problematic move. But who knows?
Yeah, we'll see. I think that the European Union is now, in 2025, we'll start testing it. I read something like that, but I'm not specialist on CBDCs also, so we will see. Okay, we have quite technical question here, maybe for guys who's dealing with technology, who will be able to answer it. I would like to ask any speaker if they noticed the controversy not that long ago around Ledger, which was accused of introducing backdoor to their cold wallets. So I don't know if you have any opinion on that. So Slav, if no, okay, sorry for that.
This is a problem among or between the Bitcoin maximalism and crypto maximalism and the users' wishes and needs. Much more crypto has been or have been lost due to users forgetting their seeds or having them stolen, but mostly forgetting the seeds, then have been lost to nefarious market players such as FTX. And the problem that Ledger was trying to solve was actually people forgetting their seeds. And Ledger offered a solution. If somebody wanted to opt in, they could have their seed backed up somehow under the quite safe technology. And in case of emergency, they would still be able to recover it. Nevertheless, this quite well thought and considerate way to meet the needs of many customers have been, so to say, turned against Ledger by crypto maximalists, by people who say, if you don't have the keys, the crypto is not yours. And there was, so to say, a smear campaign saying that Ledger wants to steal your crypto. So that was quite spectacular, and Ledger had to postpone the solution until the time is ready for that. And I have utmost respect for the company, and it's quite unnecessary that such things happen in the crypto space.
Okay, thank you. Okay, so thank you once again for your input on that. And we have one last question from the audience. It's again for Mr. Forgacs. You have mentioned it is better to buy crypto through Fumbi rather than Binance, for example. How can Fumbi be more trusted and secure than Binance? That's quite interesting question.
Dozens of regulatory issues and criminal investigations on our shoulders. And that's something that cannot be underestimated. Fumbi was always play safe, play slow company. We never ever tried to go aggressively on the market and get as many users and as many assets under management as possible by ignoring the laws. And that's actually what Binance have been doing from the very onset. And that's why many high quality people left the company even quite recently. And honestly, I could never work on a high position in a company that has 80 or 90 different investigations in dozens of countries. So, but that's just comparing to Binance. Otherwise, Binance, of course, has a good technology stack. It's huge. It has a lot of money. I don't suspect them from that they want to steal users' crypto. I think it's a quite a good company, but still, what can happen after all these investigations take place, and the owner and founder of Binance himself has been indicted in the US, as far as I know, or not indicted. At least he is investigated as well as a person. So what we try to do, play it safe, be not only trustable, but also act in a trustable way, and not to break any laws, and be reachable here. So that's maybe the most important thing. Anybody wants to talk to us, you can talk to us, and we try to be transparent. Twice a year we have audit of the crypto assets in Fumbi. If I remember, last time Binance published its audit, it was lacking one side of the equation. There were basically only assets. There were no liabilities towards the users. So there are a lot of issues in crypto space, and we try to go slow and be a safe player.
I hope that the question was answered. So it's about trust. If you trust someone without any reputation issues, or trust someone who is quite bigger or big but had several reputation issues or possible accusation or criminal proceedings in the future. But that might be not also the issue. We'll see. So it was the last question we have from the public. I would like to thank our speakers for attending today to this panel discussion. Thanks for their really thoughtful opinions and inputs into our discussion. Hopefully we will see some times in the future, maybe on the next FINTECH. So thank you once again, and that's pretty all for today.